I have been trading profitably for 2 years, and through these 2 years, there's one thing that has always made me money, and that is trading reversals. In this video, I will show you my foolproof strategy on how I always manage to catch reversals all the time. I will show you all the confluences that you need to know and see on your chart step by step through to trade this strategy. So let's get onto the chart so I can show you. So first of all, what is a reversal? Well, a reversal is when price is trending in one direction. So in this example, we have an uptrend, and all of a sudden the trend starts to reverse and we start to create a trend in the other direction. Now, what is so special about trading these reversals is that you can make a lot of money, because it means you could catch a trend from the very beginning, like so. And if you manage to catch the trend perfectly, you can get entered in a trade all the way up here and catch price falling and falling and falling, or going up and up and up. So that is why trading reversals is really, really good for making money. But it does come with a high risk. You are trading against the major trend, and what people tell beginner traders is that the trend is your friend and you should follow the trend. But once we become a bit more advanced and we start to understand the markets, these reversals can be traded to make a lot of money. So the very first thing I like to look for when trading reversals is I need to see a liquidity sweep. Now, a liquidity sweep can be, in my experience, two major areas of liquidity. We want to see session highs or lows being taken out, or we need to see higher time frame highs or lows being taken out. So there are two things: session highs and lows, and higher time frame highs and lows. So session highs and lows are very simply highs and lows from the previous session. So we have Asia session, which goes to London session, which goes to New York session. Now, if you don't understand anything about sessions, I made a full guide on trading all these sessions and what strategies to trade, how to trade them, how they move, and I'll leave that in the top right hand corner for you to watch now or after this video. But let's say, for example, we are trading during Asia session, and what Asia session likes to do is consolidate. So this would be our Asia session. Now, our Asian highs and lows would be the highest point in price that Asia got to during its session, and the lowest point of price that Asia got to in that session. So overall in the Asia trend, this would be our Asia high, and of course this low down here would be our Asia low. So because we have our Asia high and our Asia low, what we'd like to look for in the next trend is price to begin to start trending in one direction. So let's say price started a bullish trend, and this would be our London session. In our London session, price would start trending in one direction, and then all of a sudden price would come and take out Asia high. Now, this would be a liquidity sweep of Asia high, because people would be trading and selling at Asia highs and putting their stop losses above it. Again, I made a full liquidity guide on my channel for you to watch if you don't understand this, but hopefully you do, because this is quite a basic concept. But all I want to see is price sweep above an Asia high or an Asia low. This could be anything. This could be a London low, London high, New York low. Any session, we want to see price sweep a high or a low. And that pretty much means break above the high or break below the low. Now, the next thing is higher time frame lows. The higher time frames I like to use to spot highs and lows are the daily, the 4 hour, and the 1 hour. And if you're unsure on how I spot these highs and lows, how I draw them, how I use them, I will be doing a full example later on in this video of a real life market, where I'll be going through each step-by-step strategy and showing you how I spotted it. So yeah, keep to the end of this video for that. But once I see a liquidity sweep, that's my step one done, because a liquidity sweep is a very good signal that price is going to reverse, because price likes to sweep areas of liquidity so that the banks and the higher and the big money can fill a bunch of orders. So let's say above session highs, there's lots of resting liquidity. So what the banks would do is push up into this liquidity, take all this liquidity out, and use this to fill a bunch of orders by triggering a bunch of stop losses, and then fill all these orders in the opposite direction. And this would be a great place to get a reversal trade, because we could catch the entire big money move down. So that is the first confluence of liquidity sweep. Now, moving on to the second confluence, it is a bit easier to understand, and it is using the RSI indicator. Now, what the RSI is the relative strength index. And all it shows is basically the current strength of price in the market. So if you come onto indicators and search up RSI, you can see the top one, relative strength index, gives this a star. So click on the RSI in the indicators tab and it will look something like this. So if you go to settings, we can just clear this up because it can look a little bit confusing, but we'll just turn off the moving average. And all we need to focus on is the levels above 70 and the levels below 30. So what the RSI shows is the strength of the trend, and it shows when price is either oversold or when price is overbought. And when price is overbought, usually it sells off, and when price is oversold, usually it has a big bullish rally. So how we can spot if price is oversold, price is below the 30 level. So below the 30 level, and the further below, the stronger it is oversold, or the more it is oversold. Now the same goes for overbought. Price is overbought when it is above the 70 level, and the same goes as the oversold. The more it is over 70, the more overbought it is. So let's say we look at the moving average, this RSI, and this is based on the chart below. But as you see here, this green, this is the 70 level, and price actually got all the way up, if you see over here, to the 80 level. Now this would be a very overbought trend, and so we could be looking for a sell-off. And as you can see, every time price goes above this level, it usually drops down. So this is why we use the RSI, and I will show you in the example later how we can utilize this. But usually, when price is above this area, it goes down, and when price is below this area, like so, it goes up. So that is how we can use the RSI to spot how overbought and oversold the trend is. So far, if I get rid of this, we have liquidity sweep spotting a potential reversal, and we have the RSI which also spots a potential reversal. Now these two things aren't signs of a reversal, but they're signs that a reversal could happen. So this is why we need to have more confluences building up together, so we can get a bigger picture of the market and have an idea, okay, what do we think the market is going to do next? So we will then move over to our third confluence, which is actually showing us that price is going to reverse. Now, what I like to use for this is called the Fibonacci reversal tool. So the Fibonacci tool is our third confluence, and basically it shows us the average range or percentage of reversal in a trend. So let's say price was trending like this. What the Fibonacci tool does is you draw it from a previous high to a previous low, like so, and it shows you where or percentages where price is going to retrace. So most people have heard about the Fibonacci gold zone, and this is between the 50% and the 61.8% reversal range. And it is when price is trending, most of the time it retests or it pulls back to the into the gold zone. So let's say we drew our Fibonacci tool from a low to a high. Most of the time, it would reverse and bounce in this gold zone. Now, this is true, and this is how you can spot a trend continuing. But we can use this in the other direction. As you can see, we have the 79% on our Fibonacci tool. And if you want your Fibonacci tool to look like mine, go to the settings and just pause the video and copy all of these down with the colors. They would help because sometimes the Fibonacci tool can have a lot of useless information on it. But this is how I like to have my Fibonacci tool, and you can copy this yourself now. But basically, there is a 79% level on this Fibonacci tool. And what it means is if price ever closes below the 79% tool in an uptrend or above the 79% level in an up or in a downtrend, it can show a potential reversal, okay? Now, what we want to see basically is, let me run through an example already. We were moving in an uptrend like so, and all of a sudden price had a big liquidity sweep above a 1 hour high. So let's say this dashed line is a 1 hour high previous, so 1 hour high. The RSI was overbought in this area, so RSI showed overbought. Then we draw our fib tool from the bottom of the previous low to the top of the previous high, and we see price closes below the 79% level of the fib. All of a sudden, we now have 3 good confluences that price is going to reverse. Now, this price closing could below, it could be a small 1-minute candle, it could be a 5-minute candle, it could be anything. But all we see is a liquidity sweep, the RSI being overbought, and then price closing below the 79% level of the fib. And these are how we can use these confluences to work together to spot how a trend is reversing. Now, why this works is because the 79% area is a very rare area for price to close below, and it usually only closes below this area when price is most likely going to reverse. Let's say it was an uptrend, price closes below the 79% area, it could now be going in a downtrend. So to support this, we can use our next confluence, which is called a change of character. So a change of character is very simply when price is trending in one direction, and we create stuff like higher highs and higher lows, which is very basic market structure. So we have a high, we have a low, we have a higher high, a higher low, and a higher high. But all of a sudden, if price was to come down and break a previous higher low, like so, this area would now become a change of character. Now, a change of character shows that market structure is beginning to shift in the opposite direction. So that would look like this in an uptrend where price broke below a higher low, or in a downtrend like we were trending downwards, like so. We create a low, a high, a lower low, a lower high. If price was to close above a previous lower high, like so, this would also be an example of a change of character because it is the first sign that the market structure is shifting. So let's go back to our example here, and we can see price closed below the 79% level, had a bit of a pullback up, but then we closed below and we formed a change of character. This could be a very good indicator that this trend is reversing, because now we have 4 confluences that show that price is looking to change direction of the trend. We have a liquidity sweep, RSI being overbought, a close below the 79% fib, and a change of character. Now, the important thing, and a little top secret trick I use, is once in this area, we see price have a liquidity sweep, I want to see high volume. Let's say price was trending up. We have a 4-hour high up here, so an even bigger, more important area of liquidity, a 4-hour high, and price did actually sweep it like so. If then after it sweeps it, price starts to slowly begin to trend down like so. Maybe we have a pullback, but we're slowly beginning to trend, and then we end up eventually breaking the 79% fib retracement. I would not count this as a 79% retracement break, because look how slow and little momentum it takes to get here. What I want to see is price break this 4-hour high and then shoot down really quickly like so, because this shows that price is respecting this liquidity sweep because of how much higher momentum it is, whereas this is showing very weak momentum, and I would not count this as a 79% retracement break. So after we see a change of character, we need to get an entry, because at this point I'm very confident. Once I see all of these confluences together, I'm very confident that the trend is going to reverse. So all we want to see is an area where we can get our entry. Now, if we're using this top secret tip of high momentum, what I want to see in this high volume is I want to see some sort of imbalance in liquidity being formed. Now, this is usually a fair value gap. Once I see price sweep liquidity, I need to see imbalances being formed. So that could be a fair value gap anywhere in price. So let's say we swept liquidity, came back down, came back up, and then once we're pushing down, we created a fair value gap in this area like so. what I want to see is I want to see price change character. So here we'd have a change of character like so. Once I see a change of character down here, I want to see price come back up and retest one of the fair value gaps it created after it swept liquidity. Once it touches this fair value gap, I will then wait for a rejection of this fair value gap. Let's say if it's either a hammer candle or a high volume candle or an engulfing candle. Once I see a rejection, I would go, in this example, short. My stop loss would be above the high of the trend, in this case it's an uptrend, or below the low of a downtrend, and then I would simply target another major area of the trend below. So this would be another area of a higher low, like one of these areas, and I would then target that as my take profit. So that is exactly how we can use all of our confluences in harmony like so to spot a reversal. And now we can move on to a real life example where I can show you how to use this in action. So this is an example that I have on gold from about a week ago. So this is the blue box where price is looking. This was just after New York session at about 3 o'clock. And I want to show you how exactly I look at this. So we want to see a liquidity sweep. So if we go to the higher time frame, I'm on the 1 hour. As you can see, around my blue box, we were in a very clear 1 hour uptrend. As you can see, we are forming bullish structure like so, and we are going up. And all we see here happen at this blue box is price creates a high, comes back down, creates a high, comes back down, and we see price come back up and sweep this 1 hour liquidity above this high. So here is where our resting liquidity is, and as you can see, price does come up and break this high. So our liquidity sweep is ticked. We have spotted a liquidity sweep because we have come above this previous area of liquidity. So now what I do is I drop to my lower time frame, either the 5 minute or the 1 minute. Now I usually like to use a 1 minute enter my trades, simply because that is the trading style that I prefer to trade, because I don't really like to be in my trades for that long. But once we see our liquidity sweep, which was at this green line like so, the next thing I like to look for, as we said, is the RSI. So I click the RSI onto my chart, and I'd have a look at where price is after this liquidity sweep. So after we swept this liquidity, look at exactly where the RSI is. The RSI is above the 70 level. We're looking overbought. It is at about the 80 level up here. So once again, we have our second confluence being ticked. We have a liquidity sweep and then RSI being overbought. So two signs to show that this trend is reversing. So we can get rid of the RSI after we know that, and we want to have a look at our next thing, which is the fib tool. So we want to draw this fib tool between a previous low and a previous high of this trend. So I'd pick maybe this low here and this high up there. And as you can see, in the same 1 minute candle, not only, if I get rid of this blue box, did we break and close below the 79% area, we also formed a change of character under these lows. So we formed a change of character and we formed a break under the 79% area with a lot of volume. Do you see how big these candles are? This would be a very, very good sign that this trend would be reversing and that we could be forming a new downtrend, because we saw a liquidity sweep here. The RSI was overbought here. We saw price sweep the liquidity, create big high volume candles, close below the 79% area, form a change of character. And not only that, we also formed imbalances. We form fair value gaps. Fair value gap here, here, fair value gap there. So all of our confluences point to this being a reversal. So what do? We wait to find an entry. How we find an entry is we wait to see a retest into a fair value gap. Now I see a beautiful fair value gap here, and as you can see, price rejected beautifully off this fair value gap in these 2 wicks. So what would you do? You would go for your short position. You'd put your stop at a previous area where you think price, if it ever gets to it, would stop. Would mean your trade is invalid. So this is a pretty significant high. So we could put our stop loss above the high, because if price ever got above here and took this high, it would probably be continuing the uptrend. But what do? We then target another important area of the uptrend previously. So we could pick either this low here or this low down here, and as you can see, if we pick this low, it would have hit our take profit for a beautiful 1 to 2.5 trade. So I hope you can see how we can use all of these confluences together to show you a beautiful trade, a beautiful trend reversal trade like so, and this trade would have taken us literally an hour. So very, very beautiful. So hopefully you guys have learned a lot from this video. If you have, join my Discord server, which is the top link in the description. I post all of my trades there as I take them live for you to watch yourself. Subscribe to my channel, watch my other videos, and I'll see you guys next time. Peace.